Excuse me 1 second. I'll be right there. I'm just finishing up. Steve Chanos, do we think Michael Oliver is accurate in his future price predictions? This is what I'll say. I think Michael Oliver is very, very smart. I think that his rationale for his predictions are right on the money. You know, time will tell, but I think that with what we are hearing and with the 45-year double cup and handle formation that we're seeing,
very good tattoo.
Hey, I think, listen, at this point, the stackers, the world's our oyster. I think right now the biggest thing is to be able to do is just hold on for the payday.
I don't know if anyone else that blends technical and momentum analysis. He turned me on to momentum analysis. I didn't know it was until I started following him. Cool guy, smart guy, and let's hope he's right. It'll be good for all of us.
Jason Kelly wants to know, where will London get physical silver?
Good question.
Will China and the U.S. deliver physical to London?
Good question. I would think that if it were me, I'd say this is what they want us to believe, that there's all these flights heading over there to take advantage of the arbitrage, and there'll be some of that. But to me, anyone in the United States who sees where it's going at that level, they'd be out of their mind to do it. If it is now a critical mineral, why would they? And I just think that more of it will not. And you could argue the same thing is true about all the countries who have been standing for delivery out of London. They've been playing them at their own game. In other words, they got caught with their hand in the cookie jar. Beginning of the year with 8-week delivery delays on a T+2 settlement system. What do you mean 8 weeks? It's supposed to be ready in 2 days. Sorry, shortage of trucks and manpower, they said.
Trucks.
Bank of England doesn't have trucks or manpower to move people's silver. They are getting caught and exposed. Where does it come from? Where does it end? What if there's a delivery failure? What happens then? Not only, as Bill Holter says, to the silver market, to the entire financial system, where now none of these commercial banks are believed to have what they say they have, whether it be in treasuries or in securities with the great taking, David Rogers Webb. It's breaking. A system that was based upon fake silver, when no one ever stood for delivery, is now reversing and everyone's standing for delivery, and that's a uh-oh moment.
You were talking about it used to be that it was 1, 2, 3%.
Not even usually at 1%.
Right, would stand for delivery. And now it's the numbers are astronomical, but it's everyone's now gotten caught.
And that's why it's in backwardation right now for 18 days in a row. It's in backwardation where
it's moved a little bit more. You know, the backwardation has narrowed a little bit from the futures.
Still, but it's still that's unusual as hell.
Tremendous.
And that means that if a dealer wants to hedge, if a dealer buys 10,000 ounces from the public and hedges it, the reason the bid prices are particularly low on silver right now is if you hedge it, you're using a futures contract that's $1.25 below spot. Well, now you're not hedged. You're naked exposed to that variance. So you would have to bid back of that to compensate.
And that's an important thing for people to understand, because, you know, I got some calls today on potentially some buybacks, and they said, but I'm seeing, you know, 52.60 on your ticker. And that's the ask price of silver. But the bid price, because of this backwardation, as Andy was explaining,
highly rare and unusual.
Very unusual. And by the way, last week it was even greater. The bid and the ask spread was even greater. It was about $3, which, you know, we thought right away when it happened, we thought there was something going on until we spoke to Matt, and he's like, no way, I can't have my bids higher. And then you saw Kitco finally move theirs. It's something that
the normal market is called contango, where you buy something at spot, and if you buy it 6 months out, you pay a fee for interest and storage, the time value cost of money. That's how normal markets work, whether it's oil or corn or metals or any commodity. If you lend your buddy money, says, I'll pay you back tomorrow morning, you're not going to say, all right, I need interest. If he says, I'll pay you back in 6 months, you might want a little interest. That's the time value of money. Backwardation is the opposite. I don't want your paper promise in the future. I don't believe it. I want it now. So the lease rate to get that metal back to cover is 39% That'll put people out of business like that. That will create margin squeezes like you've never seen. And then same thing in SLV with the borrow rate at 19% and hardly any shares out there to borrow. We're getting to that point where you could argue the game is beginning to get very interesting and has been exposed by some very big players. Now, how does it resolve? Will the metal flow back to London? If this were all the normal times, the answer would be yes. There's a big variance there that you can capitalize. You buy the futures at $1.25 back a spot and deliver it over there and make the spread. Some traders will do that.
Yeah.
But some won't. Some will say, screw it. It's the metal in my possession is worth a whole hell of a lot more than the money that I would receive back for it.
Kevin Spence, how much silver can you carry across borders?
Much as you want. You just have to maybe declare it,
Yeah.
depending upon where you're going.
That's it.
But how much silver can you carry, period? I mean,
It's
I'd
heavy.
like to see it carry more than 3,000 ounces. I'd walk 100 feet. But, you know, you could carry $1 million worth of gold in a backpack real easy and declare it. And there you go.
Here's a good one. Sideways says, would you guys share your thoughts on Sprott if you feel you have accumulated enough physical to the point it's no longer practical?
Well, let me take this one.
Yeah.
Rick Rule is my friend, and when he was the CEO at Sprott, I got to know their programs very well. I've worked very closely with all of their brokers for 20 years. They still run business through my company, and I love them. And in the world of paper, there is nothing better than PSLV or PHYS. He is a man, Eric, and his legacy is a company and a man of integrity. But let's just weigh the benefit. You're going to pay, I want to say, a 60 basis point management fee for PSLV or PHYS. You could buy physical, hold it in one of our Brinks facilities for far less than that, and have physical. Now, they say you can take delivery of PSLV. It's in 10 1,000-ounce silver bars minimum. They say you can take possession of PHYS. It's in a 400-ounce gold bar. Good luck ever moving that. We can't put more than 150,000 of metal in a package. How are you going to put a package in? How are you going to ship a 400-ounce gold bar anywhere if you want to sell it? Who's got the money to buy it? So the point is, in the world of paper, there's nothing better than those two. Plus, they're closed-end funds, which means that you get to pay the capital gains rate, not the collectible capital gains rate of SLV and GLD. If I'm buying paper, it's all I'm buying. But if you can hold the physical in a vault for less than the fee that you're paying,
The
management fee, then I would say you're better off buying the physical.
Yep.
By the way, the storage fee is added to your cost basis each year, meaning it's tax deductible. It's even less than that management fee now, way less, because you can deduct it when you sell it, the cost of storage.
Wayne Robertson wants to know if we will ever be back on the gold standard in our lifetime.
No, but I think
so
we will have a treasury market backed by it, and it will be used as a settlement vehicle around the globe to settle imbalances in currency trades around the globe. I think you could see something like a stable coin pegged to gold, but as a currency, I don't think so. The states are getting closer to it, but I think it'll be integrated into the monetary system, but I don't think we're going to see a system backed by gold, the currency, but the treasury market, yes, I do.
Extreme 6.0 wants to know, why would you want to exchange gold for silver? Right now, one of the reasons that you'd want to exchange gold for silver is because, at least what we believe, is that you'll be able to buy a whole lot more silver now because of the gold silver ratio. And then when the ratio normalizes and we exchange, let's say it gets back to the historic numbers of 40 to 1. Right now we're sitting at 80 plus to 1. You'll be able to get yourself and yield a lot more gold then with the proceeds of the silver. So that's why we think it's a pretty good trade right now to be selling gold for silver. And then when it normalizes, we then swap the silver for gold once again. So Andy's done it a handful of times in his lifetime and career. Been the best trades, he'll tell you, been the best trades of his professional career.
It's a speculation, but there are very few times in anyone's investing career where you have the ability to, if you just get back to 100+ year average, it's a double.
Yeah.
But it is a speculation, and bird in the hand, gold is worth what in the bush. It's not that you should do it, it's that it's an opportunity to double what you would start with by if it just got to its 200-year price average, you're still 7 times higher than it's coming out of the ground at.
Yeah. Robert 292 thinks silver is going to be 100 by the end of the year. That's pretty optimistic. I mean, look, I think that when we were here a couple of months ago, I said that I thought we ended the year between 60 and 70. I stand by it. I mean, right now we're sitting at a 52.50 spot. So we're only about 15% away. I know it seems like a lot, but in moves the way that the equities markets have these gyrations, I don't think it's that unobtainable. Really? And I do think that we're going to start seeing moves.
Be 20%.
No.
Yeah.
No.
50.
Then it's going to be over.
You said 60. You said.
Yeah.
Oh, I thought, okay. Yeah, you're right. I
Yeah.
thought you said 65.
When it comes to math, leave it to me. Remember, sometimes golf, can't add right. It's okay. But needless to say, I think we're going to start seeing moves that are going to be a lot more great and I mean, it used to be that
$3 a day.
correct, and that's going to, I think, start to be more of the norm, and then we'll start seeing those $5 moves. And I think once we start to see a $5 move, that's going to become more the norm. I think there's going to be a lot of things that we haven't seen yet, and I think it's very much on the horizon. Let's see. Michael's experience during the last all-time high, correct me if I'm wrong, but I believe more people were selling gold jewelry, gold bullion, and silver bullion, and sterling silver flatware. All of these shops competing.
Yeah, that's the point. Everyone sold what they had. No one thought it would go this high. Even the bulls didn't think it would go this high.
Yeah, and some of the people that are selling now aren't selling necessarily because they think that silver and gold aren't going to go higher. They're selling because they need to. They need more money, and I think that's more indicative of where we are in the economy and in the environment with inflation as it is. So I think that's really much more of the situation than just everyone thinks that the metals have hit a peak. I don't think that we are overbought. I think that we have just been suppressed for so long that we should have been at these levels so long ago, especially when it comes to silver. So we only need 2 billionaires to invest in silver to change everything. Well, already we have billionaire investor David Bateman, who made a huge bet, and
David's awesome.
That has been paying off for him.
He follows me. I was blown away by that.
Really?
David, if you're watching, thank you, brother.
Yeah.
And we need more people like you
We
at
do.
your level who are speaking the truth.
No doubt about it.
Most of the people at David's level,
David, if you're watching.
yeah, most of the people at David's level probably have, teams of money managers. David is obviously someone who took that upon himself to be his own manager, and I think that's admirable for a guy of that success.